Enphase actually went to 190, I think one today.
What is it that happened? Why are we talking about it specifically today?
Today it tanked a lot. I just want to point that out. There's a massive red candle, and we'll go into this chart in a second. This is what happens when FUD comes out at the most opportune time for the short sellers, I feel, who wants to ever push EVs, technology, solar down. This is like a perfect article that scares away weak hands. I don't know who's scaring away. New California proposal would reduce subsidies to solar industry. Okay. All right. Tough times could be coming for the solar industry due to supply chain constraints and rising costs for developers. The US market is expected to grow 25% less than previously forecast during 2022, according to a new report. The first thing they're not saying is, what do they expect it to grow for the next year? No one said like, oh, we expect it to double, but it's going to be 25% less, so it's going to grow 75%? Is this what they're saying?
It's really fishy wording, because when you say it's going to grow 25% less, the percentage doesn't matter. What matters is how many actual homes do you see? Is that 1 million homes? Is it 2 million homes?
Right. What is the actual growth? What is the actual growth?
Yeah. What is the actual number of homes it's going to be, regardless of the percent over year? What are the number of homes that are going to get solar by the end of next year? Because that tells you how many available customers they have.
Snapshot. Cost related to utility scale solar projects had declined by 12% between Q1 2019 and Q1 2021. But the recent spike in the price of materials has erased 2 years worth of cost declines. Despite the pressures, the US installed solar capacity jumped 33% year over year to 5.4 gigawatts. So even with all of the negatives they're trying to point out, they're saying it still grew 33% year over year. Okay. Sounds terrible. Another article says U.S. solar industry will grow 25% less than expected during 2022, thanks to supply chain issues and rising costs.
25% less than previously forecast during 2022. So what they're saying is it's not going to hit some imaginary number that they speculated on anyway. Literally nothing's changed. They're saying that their speculation is off based on this current supply constraints.
This is not a believable article. All these articles are complete FUD, and I'll show you why.
But it's on CNBC. What do you mean?
I'll show you why. Because you go to the site directly, Solar Energy Industry Association, and they do have this article here with California decision could harm net metering and all this. But then in the very next article, that's not getting pushed, solar prices continue to rise, but Build Back Better Act will boost installs 31% through 2026. Okay, wait, hold on. I thought it's going down. Now you're telling me it's going up.
But technically both could be right. It could be 25% less installs next year, 2022, 2023, and still hit 31% by 2026.
In general, basically. Maybe they're saying the average of this is 31% in general.
But from what number? From what number?
I know. But it even gets better than this. So there was a Rethinking, it's a RethinkX site. Kathy Wood is like a part of this somehow. I'm not sure how, but this guy goes into the forecasting of solar and how they were basically wrong every time they projected anything about exponential growth. So let's listen to this guy for a couple of seconds, all right?
Industry forecasts have made simple linear projections for the growth of solar, for example, year after year for 20 years. Now, at the same time that disruption creates a new system, it also wipes out the old system.
These are the actual projections by the solar industry. Always a linear sort of growth up. Every year they project a little bit more. They're still projecting this type of growth as opposed to like basically a vertical line that's taken off, just like with EVs. What happens when an EV's in everybody's garage within 5 to 10 years? What happens to the solar industry at that point? Everyone needs solar panels and batteries in their home as soon as everybody has an EV because they feed off of each other.
Maybe they won't, right? Maybe they'll just get a car charger and charge off the grid. But the point is, every EV that's sold is a potential solar customer, period. How many cars is Tesla going to produce next year? Say they would produce 1.5 million. If you get 10% of that, what is that? That's 150,000 solar installs if it's just 10% of that. And it could be more.
And that's only Tesla. That's not counting all the other guys coming in.
That's just Tesla. And so when you start to look at the numbers, it seems crazy because the numbers get so big so fast. And you say, oh, that can't be right. Let me taper it. Let me be conservative. But it's definitely not a straight line like they keep projecting. You think after 10 years they would understand. Maybe it's more of a curve. Why don't we just connect the dots instead of trying to draw a line each time?
Conventional forecasts get disruption wrong. Major industry forecasts have made simple linear projections for the growth of solar, for example, year after year for 20 years. Now, at the same time that disruption creates a new system, it also wipes out the old system. And this isn't theoretical. It has already begun with coal in the United States. Year after year, these same industry forecasts have been desperately trying to save coal from collapse with wishful thinking. But coal in the United States has been disrupted, first by fracking and now by solar and wind.
Okay, so every year they predicted since 2005 this sort of linear slow increase. In fact, coal was increasing since 2005.
Well, they were kind of saying it's gonna bounce back. This is a momentary dip.
Well, no, here they're showing, right, it's going to come back up. Okay, it's going to come back up next year. It's going to come back up.
Yeah, it'll come back.
Look, even now they're predicting it's just going to flatten out. As opposed to this guy's prediction, it's going to zero, dude. Just wake up. At some point, things become obvious. And yet, for some reason, when these industry predictions happen, why are they always so bad?
The coal industry is not just going to lay down and die. They're going to lobby. They're going to do whatever they can to keep their industry afloat. You see this with all these businesses that are being disrupted. First, they'll ask for subsidies, or they'll claim that it's an unfair advantage. Whatever it is, whatever they have to say, including paying some guy to create a forecast that looks like it's going to level off so that the money that's invested in the industry doesn't go away. This is the death throes of those industries. What are you seeing in the car companies right now? You know, all the FUD that's coming out against Tesla. The guy gets person of the year and the stock tanks the next day. There's all this FUD coming out. It's because there are a lot of interests that benefit from keeping the status quo. None of those car companies would be making EVs right now if it wasn't for Tesla, and none of these coal companies would even be thinking about renewables if it wasn't for solar, wind. They're not going to go out without a fight.
Basically, this is FUD, and this was an opportunity to basically get me some cheaper shares, okay? The chart. Let me just be clear about this. They're not in their main channel anymore. We were in this main channel for 5.5 years. And now it looks like we can't be in this channel anymore. And look, this channel was sort of crazy. This channel was predicting by 2023, is this right? $1,752.
The highest price would be $3,000 a share. But I don't understand. At some point, Enphase is going to split. It's not going to be $3,000 a share. It's going to split 5-1. It'll be $600, and it'll run up again.
This channel basically said we are going to, let's say, $1,500 in a couple of years. Kind of crazy because it's only $200. So
Tesla is back at 1,000 after splitting, and it's also an energy company.
You do have a point there.
Look, it's like when Kathy Wood said Tesla's going to 7,000 a share, it seems crazy because the total number of shares that were outstanding. Once Enphase splits everybody, it'll calm down. I was going to say, this kind of looks like a lengthening cycle because more money coming in moves it less and less, so the curve starts to bend.
I actually agree. I don't think it's going to continue in this main one. Look, if it does, I have the shares. I'm ready for my exit.
To go.
I'm ready to go. But even if it doesn't, look at this. So this new sort of trend it's been following still ends January 2023. So basically 1 year from now, around $400. That's what it's saying, around $400. But even then, that's a double in 1 year.
The stock market in general is just way more volatile because there's just news everywhere. 10 years ago, we didn't have, or whatever, it's 15 years ago, we didn't have Twitter. So you'd have to go search for that news. Now that news with the algorithms, it's finding you. So it's really hard to say that channel is going to hold for a year because, man, anything could happen. And the reverse could happen, right? Some really bullish news could come out and that stock could just move up to a new plateau. It could literally just ride in the same channel, but $100 higher. It's only $30 billion.
The market cap of this stock is $27 billion. Tesla's $1 trillion. And if this is going to be a real player in the energy market, like we discussed in another episode, it can't be $27 billion.
In our last video, we showed that the number one energy company in the world makes $89 billion a year. And
their revenue is around $1 billion, by the way.
And Enphase's revenue is currently $1 billion, right? So there's a lot of room for this thing to move, and it's not going to be a straight run up there.
My thesis over the last 5.5 years of Enphase, anytime it gets close to the 200-day, and the RSI is around here, around 32, 33, 34, I start dollar cost averaging back. This is the opportunity that you have in 2021 to get Enphase again for a reasonable price, and having a good chance over the history of the chart, that 200-day does not usually last, that we can see another move up to another level of Enphase, whatever that is. One scenario is we bounce off of somewhere, possibly even this 184. And the reason I say that is because before we were in this little downtrend happening, and if we continue it just to prove that we are no longer in a downtrend, it could be at 184 or 185 where it starts to move up. But number two, if you look at the trend we're in right now, we are in a clear downward trend. And the bottom of the new channel that I have doesn't end till 160 approximately. Let's say we followed all the way down. So let's say 160. Yeah. I don't know if it's going to make it all the way, so I can't wait for that.
Look at your line on October 4th. The last time it broke the 200-day moving average.
October 4th. Okay.
Look at that.
It went underneath. And the RSI was really low.
Was gone.
And remember, it wasn't exactly at 30, but just 36. It was low.
And look what happened. It immediately was bought back up and eventually was able to get past that level. So it's possible it could dip below the 200-day. It might, but it doesn't look like it's going to stay there very long.
Enphase is in a position that the RSI is really dropping fast, and the stock is pretty cheap right now, considering all our technicals that we've discussed before and the bullish scenario of Enphase. So Dude, if it's hitting around 180, I don't know how I cannot almost double my position, basically. The calls, I'm talking about calls. I'm talking about even selling cash secured puts, getting paid for 2023, just to say that, look, it's not going back to 140, whatever you're thinking, 130. So I don't think it's going below this 160. I'm making a bet that it probably isn't. And even if it does, look, even if it does, do you think it's going to last under 160 for too long?
No, I mean, I don't even think it would last below 180. Really doesn't last long under the 200-day, minus that one massive sell-off that we had at the beginning of the summer where everything came down.
I do have a plan to sort of DCA back into Enphase again. When I say again, I still own my shares. They haven't gone anywhere, but meaning just to accumulate more shares. And I'm willing, as we discussed in another episode, which I think we're posting after this one, but I'm willing to sell speculative positions that I have that are also down, take that loss, tax loss harvesting, and put them into Enphase. I'm just willing to do that because Enphase is just an easy double, triple, quadruple for me. And if I wait longer till 2030, what is it in 2030?
Right,
I can't even imagine what it's going to be in 2030.
Enphase seems like it's going to be one of those that's going to be one of those major players in terms of an Exxon, a Chevron, in this new sort of decentralized energy grid that we're creating here, this movement that's happening in America right now.
If people are not paying attention to what's happening with companies like this, and SolarEdge is another one, I'm not as bullish on that one, but still, it seems like inevitable what's going on. And it's like me and you can see it clearly, but I think a lot of people don't. You know, there's a lot of people who don't see this clearly. Like probably your parents, my parents, don't understand why we would want an EV car, don't understand why we want solar panels on our roof.
They're like the canary in the coal mine, where once they start talking about it, you know it's over. Now we're at the top of the exponential dip. When your mom is telling you about lithium ion versus sodium phosphate, you've reached the peak. It's 100% penetration. The growth is over.
Guys, when your mom starts talking about Enphase, sell.
Sell it, right? Another episode of Enphase Finance.